We may be live. What's up, people? Fat Man Zoom in the house, and I'm riding solo. Let's do a tech check. Can y'all hear me? Can y'all see me? Think you can. We good? Am I choppy? I feel like I'm looking choppy. What's that about? So my tech check involves Brad. Checking in with him. All right, guys. Welcome to Own the Chaos and Stock Watch Sunday on Monday, Labor Day. Hope you guys enjoyed your Labor Day. We got a lot of good stuff today. Thanks, guys. But if you guys haven't been here before, let me properly welcome you. This is OwnTheChaos.com. This is Own the Chaos. Not only is it Monday, there's going to be a lot of growing pains. This is Own the Chaos. The stock market is crazy and chaotic, and we've made it our mission to help you own it. Normally, I got my man, Brad B. Smith, next to me, but he needed a little vacation, and we needed to give that man a little vacation, a little break. So you're going to get me pretty much all week. We got a couple surprises this week joining me. I have some friends coming on the show with me. We're going to have some different topics. We're going to have a good time, but a lot of the same stuff. So I'm sure you guys are excited to see my beautiful face. And speaking of beautiful faces, I want to shout out the starting five: Rudy Brown, Sam Cisneros, Emerson Martinez, newcomer, Arnie Vonneker, and Eric Brands. It has been a while, Arnie. Welcome back, brother. It's good to see you guys' faces. It's good to see you guys' faces. Today's going to be a little bit different, only because since I get free reins, I want to answer some of the questions that I have gotten commonly in our Discord. So we have our Chaos crew, and I get messages. And actually today, shout out to Dave Perlmutter. He had asked me a question regarding kids account, but I thought we would talk a little bit about that. So we got a few things to go over. We're going to talk about what's going to happen in the stock market today. I'm going to talk to you about earnings, obviously what we have expecting coming up this week, and what I'm going to be looking at. So we're going to cover the main topics. However, our top five stocks, which we always have, I'm going to bring you guys the top five stocks. But we're going to look more of a long-term perspective. So today we will be talking about the top stocks for your kids, to teach your kids how to invest. But I'm also going to give you hopefully some nuggets that pertain to you and how you can invest. But think about long-term is the theme for today. Long-term investing. I'll try to get to some of your questions regarding the short-term stuff as well, maybe some swing trading things. But today will be all things long-term. Definitely throw your questions in the comments. Utilize this opportunity to talk to you about really the common questions I have that I haven't been able to address publicly. How's your Labor Day weekend, folks? Let me tell you, I just got back from the beach. I feel good. I feel relaxed. And I feel energized. Surprising, I feel relaxed. Let me tell you about kids at the beach is crazy. It's exhausting. It is so much. But I had a couple extra days to recharge. I got back Saturday, so we're all good. Will Salkin, I don't have kids, just came to smash the like. I appreciate that, brother. I still got value for you, even if you don't have kids. Honestly, these long-term stocks will really be for everybody, but it's really about teaching as well. Setting what's up. I'm going to say what's up from a few people. Kevin Hawthorne, shout out from Lakeland, Florida. Florida peeps. Eric Scarl. PayPal is looking good. A lot of good stuff going on with PayPal. Isaac Mejia, Bitcoin. We're going to talk a little crypto as well. Excited. Huge move for Bitcoin. Key move, I should say. So that should be good. Mysterious Gal just got back from the beach as well. Bruce, what's up, my man? All good stuff. Philip Stroh. Hello, my friend. So stick around for the top five stocks. And guys, while we go through this, please make sure you hit that like button, hit that subscribe if you guys are interested in seeing more of what we do. We go live every Monday through Thursday, 3:30 p.m. Eastern time to see what's going on in the stock market. And we also go live on Sunday at 7:30 p.m. Eastern for Stock Watch Sunday. Obviously, if it's a holiday, we push it back to Monday. That's why we are here. So I'm going to pull up my notes for today and the things we're going to discuss. So I actually wanted to let you guys know. I don't know if you can see. Let me see if I can pull it up in my screen. We got a Peloton in the house. And for those of you who are OGs, you know that we have a Peloton in the house. But I just finally got into the Peloton. You can't really see it. It's like right there, right by that lamp back there. So we get a Peloton, and me getting on this bike, obviously everything we've known about it, just gets me even more amped up. And I was thinking like done using the Peloton because I know a lot of critics will say it's eventually going to be a clothes hanger. Fair point. But what Peloton does, and we've talked about this a lot, it's not about the equipment. A lot of people focus on the equipment, but we've talked about the very low churn rate. We've talked about the community they build. And it's really, this community is amazing. And I'm not sure what they have from a legal perspective as far as ownership and competitive advantage. I don't know what they've copyrighted. I don't know what's theirs and proprietary to them, but I've got to imagine a lot of their technology is, but the intuitiveness of it, the intuitive nature of it, the ease of use, the community, all of that stuff is just incredible. And I mean, I got to say, it just makes me more and more bullish. So I wanted to give you guys a heads up. You might hear us talking more about Peloton in the future, but exciting. I also noticed on their website that they're actually pushing the commercial a little bit more, commercial products, which we talked about that as well, Precor, that partnership with Precor, and that could be a whole nother revenue stream to get really, to be really excited about. So stay tuned for more Peloton stuff. And hey, if you guys just want to jump on a ride, follow me on Peloton. I never thought I'd be asking this, but follow me on Peloton. You don't have to, but Fat Man Zoom, very easy to remember. Carlos Reyes Borges. Is it Borges or Borges? Probably Borges. I'm 17, my first in attendance. Welcome, brother. Appreciate you. The beach is overrated. I don't know about that. One from Miami and King Hargrave from West Palm Beach. All right, so let me start with let's just call it the crypto breakout. We've been talking about this, guys, and I'm really excited to see how crypto has been performing. And then for those of you guys who are new to the channel, Brad and I have really just been focusing on the two big dogs, which are Bitcoin and Ethereum. I have spoken at length about how I've been more bullish on Ethereum. I have a little bit of Bitcoin, but I'm really going heavy into Ethereum. That's looking like it wants to break out. And I'm going to go ahead and I'm going to share my screen so we can actually look at the chart. But Ethereum toying with that 4K. Is this going to be the week? I think so. I think this is the week it clears 4K and it stays above 4K. A lot of bullish indicators and factors for Ethereum. But if you look at Bitcoin and Ethereum, similar move since about 45 days ago, you see this move from Bitcoin, Ethereum and Bitcoin that was very similar. There's a little bit of pullback, comes all the way up. And as you can see, July 20th, it had closed at, well, let's actually take July 19th. It closed at 1730, and 45 days later, it's testing $4,000. That's crazy. Very bullish on Ethereum. But Bitcoin's actually making a little bit more of a move of late, the last few days, and it cleared that $5,000 that we were talking about. Look in the daily on this chart. And as I pull this out a bit, really looking at that 60, if you can see back in May, the trend again looks awesome, and it's the same time frame. So right here where my cursor is July 19th, and you see from July 19th moved all the way up. So it went from below 30K to now 50K. Love that move. And we know crypto makes these moves. crypto shows this volatility, and it's important to understand is just as much it can run up, it can run down. However, we've been talking for probably 2 months, even before that, maybe June, we talked about playing chess when everybody else is playing checkers. And we talked about getting into crypto, whichever your favorite crypto was, because they were all struggling. They all had pulled back. And now they all look really, really good. Most of the big dogs are looking really good, and especially Bitcoin and Ethereum. And the thing here is not get greedy, because there's always going to be opportunities to present themselves. But I would love to see this stay above that psychological, what was a support and now what was a resistance and now potentially a support of $50,000. I wouldn't necessarily be worried unless it went below that 47,000 range. Then I would be like a little bit concerned. But if I'm a long-term investor in either one of the coins, I'm fine. I'm buying on the dip. And that's actually what I did for Ethereum back when we did see the dip. And I'm going to go back quickly to Ethereum's chart. My initial position in Ethereum was around $600. And then when we had this first, so we had this pullback right here, I had gotten into it just around 2,300 and then got at it again at 2,000. But I'm consistently dollar cost averaging. This was just an additional investment on it. So all this to say, I think the conversation will continue to build, especially because Bitcoin, which is the leader, is really above that 50,000. I think now you're going to start hearing more and more about price targets. All right, Bitcoin going to hit 60. When's it going to hit 60? Bitcoin to 100,000, which isn't out of this realm. All those numbers are going to start coming to fruition. I think what Bitcoin first has to do is get to 60 and then go for those all-time highs. And if it could get above the $66,000 mark, we should see a massive run. Will Salkin says Bitcoin goes live in El Salvador tomorrow, and their government is giving $30 of Bitcoin to each citizen that downloads an app. Wow, that's interesting. Bruce, not Lee. I like that name. It sounds like a very fitting exercise bike model. Will Salkin, it's Fitman Zoom when you're on Peloton. That's right. That actually, that would work. All right, moving on. Let me switch here. 1 second, guys. Moving on. The next thing I wanted to discuss was, and this is the main topic for today, outside of the stocks. I want to discuss the accounts that I recommend that I'm in, as far as what types of accounts I'm in for investing, and also what I recommend to the people close to me. All right. And I'm going to tell you why. So a lot of people, when they get into trading or investing, they think about the brokerage, and the brokerage is fine. And obviously it's important to think about a good brokerage. However, the one thing I do want to say is I don't know if the brokerage is as important as, I'm not even on camera 3, my bad. I don't know if the brokerage is as important as the type of account you have. Right. And so from a basic level, you have taxable and non-taxable. I don't want to say non-taxable accounts, but you have taxable accounts and sort of tax havens or tax-friendly accounts is probably a better way, because that doesn't mean that they don't have tax implications. But knee-jerk is most people get in, they open an account through Webull, through Robinhood, through TD Ameritrade, whoever your broker is. Those are all stockbrokers. But then they just open a regular account, a cash account, might be a margin, who knows, but they don't think about the tax implications. And I'm telling you right now, the type of account is far more important than your broker. So what types of accounts am I in? To me, anybody who I'm friends with who asks me what type of account they should be in, I am in Roth IRA. That's the first thing who earns less than $140,000 adjusted gross income a year should be in. And a Roth IRA, and a lot of you guys, especially on the Chaos peeps. I apologize because a lot of you guys know this, but there are enough people who don't know this that need to know this. A Roth IRA, a retirement account. You all should have a retirement account. But to me, I believe that a Roth IRA is my savings account. I don't need a savings account. My savings account is only for emergency funds, and that's it. Everything else, why would I want it to sit and lose 3% a year for adjusted inflation? It makes no sense. Zero value off of that. So why is a Roth IRA so great? Now, the first thing we know is there's income limitations. So like I said, 140,000. And knowing that's 140,000, you'd wonder why. And I think that's sort of the one giveaway of why it is such a key tool, is because they're saying, hey, not everybody can do it. You have income limitations. We're only trying to, this is such a benefit. I don't want to say we don't want, but there's a reason why there's limitations to it. And I think it's because it's such a great opportunity. So here's how Roth IRA works. Now, money can get taxed on the way in, or money can get taxed on the way out. Your regular cash account gets taxed on the way in. The money you put in is already taxed. It's post-tax. And then when you take money out, any money you've made, you get taxed again. And we won't get into short-term, long-term, but just understand, depending on how long you hold it, you're going to be paying more. So it just depends on that. So there's a bunch of factors into how much they're taking, but they could take 30, 35%, if not more, of your gains. So you put in $10,000, you earn 30% in a year, your account's at $13,000, you're going to pay 30%, if that's your tax bracket, 30% of that $3,000. So instead of you getting that whole $13,000, what's that? You get $900 taxed. So it's $12,100. I don't know about you, but I can do a lot with $900. And you start taking that $10,000 and you start compounding it and thinking about, okay, what about $100,000, $200,000, right? Because it's a retirement account. So the number one reason why Roth is nice is because of the tax implications. You get taxed on the money in. So the money you put in is post-taxed, but any of your gains is tax-free. Now, you have to there's age limits, and I'll do another video on all the requirements. There's certain requirements, but as long as you meet those requirements, any gains are free. Now, the reason why I use it in place of my savings is because you can pull out at any time the money you put in, you can pull it out. So it's my savings account because I can get access to it. I don't lose it. Whereas a traditional, let's say 401k, you get hit with penalties if you pull money out in most situations. The other thing that Roth is cool with for first-time home buyers, you can obviously pull out all the money you put in, like I just said, but on top of that is, you can use your gains towards a down payment on a house for first-time home buyers. So automatically, it should be a savings tool, but also potentially a savings tool towards a house if you're a first-time home buyer. So somebody like Camilo, you're 17, you start a Roth IRA. Now you have to have a job, earn income, but you start towards that retirement. It's your savings account. So you know the money's there if it's an emergency, but also money you're making, you could pull you can pull up to $10,000 off tax-free to put towards the loan of a house. Sorry, to put towards the down payment of a house. So all that stuff is great stuff. And just so you guys know, I've told a couple people this in Discord, every family member that is sort of one away from me. So my kid, so my daughter, everybody knows Mini Zoom, but also my niece and my nephews, any new family member that are 1 degree away from me, they all get two things when they're born. They get a Roth IRA, and I'll explain to you kind of how that works in a second, but they'll get an account that will end up being their Roth IRA, and they'll be a 529. So I'm not getting into the nitty gritty of those, but look them up, 529 plan, college savings plan, and Roth IRA. Now, when they're a kid, they don't have any income, but you set them up for eventually getting a Roth IRA, and then they could learn retirement, but also you can start building wealth and building long-term investments. Now, that's one. Roth IRA. If you don't have a Roth IRA, I would strongly encourage you to look at it, speak to a financial advisor about it. But first thing I would recommend anybody doing, and if you haven't maxed out your Roth IRA, and the income limit, sorry, not the income limit, but the contribution limit, I believe for 2024 is $6,000, if I'm not mistaken. It's increased. I think it was 5,500 last year, but I think 6,000 might be 2021. Somebody throw that in the chat. Now, here's another account you should think of, and this is for my entrepreneurs. These are the people that have their own business, have a side hustle, gig economy, all this other stuff. This is for only people that own a business. You can't have any employees. It could only be you, and it could be your spouse. That's it. If you have a business and you have employees, you don't qualify for this. If you don't have a business, you don't qualify for this. But most people, we want a side hustle. Guys, look into a solo 401k. If you haven't done that, look into a solo 401k. Number one, if you're an entrepreneur, start thinking about retirement for yourself. This is a cash flow vehicle. And what a solo 401k is, it allows you to contribute to your retirement, but it allows you to take up to 50% of the balance as a loan. And you determine, first of all, the interest rate, and you determine the terms, so the payment length, right? The payoff length, and I believe it's up to 5 years that you have to pay it back. And any interest you determine, so it has to be a competitive interest rate. So let's say you do 3%. Anything you determine, that interest goes back to you. So you pay yourself back, so that money goes back in your account, and you get interest on top of it. Nobody's talking about a solo 401k. You need to look at a solo 401k if you're a sole proprietor, if you're an entrepreneur, you're the only one in your company. Look into it. You can pour money into it, and basically it's a cash flow vehicle. Or sorry, the word's not cash flow. Basically, it's a contingency account. So some people in the past, entrepreneurs, cash flow is tight. It's hard to justify locking up their money in a 401k in a traditional IRA. This allows you to draw against it. And again, if you buy a house, there's actually more favorable terms beyond just the 5 years. You get longer payment terms. I believe you can withdraw a little bit more, but a lot of things that are encouraging you to invest in real estate, invest in your first time home. So all of this stuff is good. We want you to save for retirement. We want you to think about the long term. And the reality is there's no reason to try to do this get rich quick, the short term swing trading, this day trading, if you haven't first locked up and set yourself up from the long term. That is just what I believe. So I'm going to stop there, guys. Feel free to ask any questions. Seton says, can't you only put a certain amount into Roth IRA? Yes, that is correct. There's a max contribution. It is $6,000 for 2021. And that means that you can deposit up until $6,000 in the year. Now, if it's $6,000 for 2021, here's a cool trick as well. You have until April, basically tax day, April 15th of 2022, to put contributions in for the previous year. So let's say you're about to file taxes in 2022. It's March 15th. And you look and your contribution for 2021 was $5,000. You can throw $1,000 in there in March of 2022 and just indicate that you want it for 2021. Just rinse and repeat. Now, 5,000, 6,000 isn't a lot, but you start adding that up over the next 10, 20, 30 years, and it becomes a lot. And those tax-free gains are really important. Gabriel Navarro, if you're a day trader, you may apply with the IRS for your gains or loss to be considered as ordinary income. Okay. I did not know that, but that makes sense. I'm sure you have to show some sort of track record potentially, but I don't know too many details about that. So you guys have those two accounts that I think would be wise to check out and to consider if you haven't. This is just about thinking about the future. And thinking about the future, we think about our kids. Mini Zoom. You guys have heard me talk about the investment for Mini Zoom. And Mini Zoom, I use the account as an opportunity to teach. Obviously, I want her to have that money in the future, but the real goal is to teach. So I'm going to tell you guys about the top 5 stocks to teach your kids how to invest. But first, we got to talk about the big earnings this week. So guys, what we're expecting for this week, not too much going on. To be honest with you, from an earnings perspective, Wednesday, GameStop. I'm going to be live for GameStop. I'm actually going to bring Don Fran from the Don Fran Show in. So that's going to be exciting. We're going to do an earnings reaction. Again, 3:30 p.m. Eastern time. Make sure you guys are hitting that subscribe button, notification bell, so you can get notified when we go live. Probably the most I'm excited for, it's easy to say this week, surprise, surprise, Affirm. Affirm has earnings after hours on Thursday. And I'm going to pull up this chart for you guys. To check out Affirm. Affirm's had a massive move. And to be honest, Affirm was trying to break that $100. Quite frankly, even though it didn't break it on the week, it didn't close the week on it. Affirm actually, I felt like held up really well, and it was very promising to see where it was at. So this is one of Brad's larger positions. With me as I load this up. Brad got into this. He's still holding on to shares. Let's look at the chart of Affirm. Look at this move up. So if you guys have been living under a rock, Affirm announced a partnership with Amazon with basically any transaction over $50. You have the option to use Affirm for buy now, pay later and set it up into installments. Awesome news. We talked about Affirm and really about, for some time now, they've been over leveraged in Peloton. So Peloton put them on the map. And that's great. But the problem became that too much of their revenue was derived from Peloton. Over 30% of their revenue was derived from Peloton. They had an existing relationship with Walmart, but that was about it at the time. So they put an emphasis on diversification of revenue. And did they do that? Not only did they have this Amazon partnership, which is huge, probably the next biggest partnership was Shopify. So the thing here is, it is clear that they're going to continue to ramp up their partnerships, and the way they're going about this is awesome. I love it. I'm excited. And what's going to happen, I think, here is the Jones effect. And so you salespeople will know this. When you talk about your neighbors, they bought something, you're trying to keep up with the Joneses. It increases the likelihood that they're going to buy something when they see their neighbor buy something. So if your neighbor buys a Tesla, they're going to try to buy a Tesla or better. If their neighbor's doing one thing, they're probably going to get on board with doing it. That's why Peloton has had such success. So if you take the biggest dog, which is Amazon, one of the biggest dogs in e-commerce, Shopify, and you start going to companies and saying, hey, Shopify's doing this, Amazon's doing this, Walmart's doing this, Peloton's doing this, it makes it easier for everybody else to get on board. So I think what you're going to start seeing is more and more partners, and I think it's going to ramp up like crazy. I think it's going to happen really quickly. Now, will we hear any of this on the earnings? Probably not. But what we want to hear on the earnings is optimism around the Amazon deal, which they will. Maybe some initial indications on Shopify revenue. It's still in the early innings, very early. But do we have a gauge on Shopify revenue? Increased guidance. All these things should bode real well for Affirm. Now, should you be afraid of a pullback, a sell-off? Maybe, for sure. I mean, you see this gap up, guys. It's sitting, this level here, $90. Got to stay above 90 for me. Got to stay above 90. But this gap, it moved from $68 to 98, over 100. It actually hit 100. You're talking about in a matter of days. So obviously earnings are always a crapshoot or always a coin flip. Could be a pullback for sure. However, the reality is Affirm is in an incredible position and they stand to continue to dominate. Getting over 100 is going to be a key resistance. And let me tell you, when it does it, I think it's going to continue to move. I think it's going to make its way to 120. That's very realistic in my mind for the short term. That's what I believe. When I say short term, the next 3 months. Before the end of the year, 120 would be a very reasonable price target. Now, it could sell off, fair, but we'll see what happens. Affirm, certainly keep an eye on. So guys, remember this week, Wednesday, GameStop after hours should be a good earnings reaction, should be an interesting earnings reaction, one to watch, but Affirm on Thursday. Fred Valoy will be here as well. We'll be watching. We'll keep an eye on it. More to come. So let me check. Costco's on Thursday. I didn't realize that. Thanks, Mad Dicks. How did I know Costco was on Thursday? Yeah, so I have Dave & Buster's. Cool. I'm looking at the Earnings Whisperer, which sometimes doesn't have all of them. Costco will definitely be one I'll be checking as well. That's definitely one to keep an eye on if they have earnings on Thursday for sure. Appreciate that. Appreciate the heads up. All right. So now let's talk about top 5 stocks to teach your kids how to invest. And I get questions about our kids. I talked about thinking about the future. First thing is understanding. For me personally, I always start with a 529 account. I'm in Maryland, so that's managed by T. Rowe Price. I just do a target fund whenever they're going to be in college. That's sort of the 29. I've had mine since MiniZoom before she was born. I had the account created, and I just continue to just add money into it in dollar cost average. But the bigger thing is her regular investing account. And I call this, it's going to be a retirement account for her. It's going to end up being a Roth for her, but I call it her house fund. So the first thing I tell her is that one, she has an account for college, and then 2, she has an account for buying a home. And what she does with it is up to her. I don't care what she does with it. But what's inside of that account, the house buying account, which is the Roth IRA account, to be clear, my hope is she uses that money to put a down payment on a house, and then the rest of it she lets and continues to build her retirement. And my hope is that there's way more than is required for a down payment on a house when she decides to buy that, but to continue to do that. So the account allows me to show her different stocks, and I've gone through different types of stocks, but here's what I've settled on is if she has, 15 years before she even pulls a dollar out of that, it's going to go up. I'm not worried about that. As long as I do blue chip companies that are going to be around, solid companies, solid leadership, I should be fine. What I really focus on is how can I educate her while I'm doing this? First is giving her companies that play a role in her. So consider that. Play a role in your children's lives. So they see it. You mention a company, they see it, they know it. It makes sense to them. But the other thing is, what are the lessons I can teach? So I have a daughter, and so that was a factor in these 5 stocks. So top 5 stocks. I'm going to start with Apple. And Apple is one that, to me, and I apologize, I slacked on this one. Apple's one to me that just makes a whole lot of sense. Kids are generally intuitive with technology. They know iPads. Maybe they have an Apple Watch. Maybe they have your old phone, whatever that is. But as I pull up this, I have a kid stocks. There it is, stocks for kids watch list. As we look at Apple, Apple's just steady Eddie. It is likely a technology that will continue to play a role in their lives. So MiniZoom has an iPad. MiniZoom has her mom's old phone. MiniZoom knows how to operate an Apple TV, all this technology that's a part of her life. So she knows about Apple. For us, it's probably the top 1 or 2 forever stocks. So Apple belongs in my kids' portfolio and will always be in my kids' portfolio. And I don't think there's too much I have to go into that to make sense. But if you look at Apple, let's look at the monthly. If you get Apple and you just pull it back, it's one of the most beautiful charts you'll ever see. And what you'll continue to hear about Apple is how much can it go up? How much can it go up? The reality is that it's just continued to go up, steady rise. It's incredible. And it's still, some would say, undervalued. If you look at the fundamentals, you can make an argument that Apple's still undervalued. So I don't want to hear about, it's made its run. There's still opportunities for it. And any pullback, if Apple wanted to go to 115 tomorrow, I would be scooping it up with both hands. So Apple's one. It's going to be around. Technology is going to be a huge part of our lives. If there's an Apple Car, that will be great. The one thing I'll say about a company like Apple that's been around a long time is they're innovating. So they're a different company than they used to be. So I wouldn't be worried about their viability for the future. They're focusing on services and margin friendly, net income friendly services. So I think it's going to continue to run 10, 15, 20 years. It's still going to be one of the big dogs. The next stock is probably the most common stock when people talk about growing up, the family bought these stocks, and that's Disney. How can you not? Kids love Disney World. It's the Las Vegas for kids. Disney is it. Number one. What's more magical than Disney? Number two, they just continue to set themselves up for success in the future. And there's no reason why you shouldn't think that Disney isn't going to be a monster when your kids have kids and when your kids' kids have kids. It ain't going anywhere. And it's an exciting time. And if you look at the chart, it's kind of settling out. I'm hoping for a breakout. Disney should be at all-time highs by the end of the year. Parks return to profitability. By the time your kids are adults, it will probably be the number one streaming service, potentially. In the next couple of years, Disney should be toe-to-toe with Netflix. When I say couple, I mean two. They should be toe-to-toe. And if they're number one, you shouldn't be surprised. That's high margin. They're going to continue to have productions. They're going to continue to drive revenue. But you know what else is going to continue to be here? The amusement parks. They will be here forever. And nobody does it better than Walt Disney. Nobody. If you guys haven't been, it is incredible. I'm telling you, it's Las Vegas for kids. It's incredible. What they do is unbelievable. And it's hard to compete with that. So, streaming service is obviously what we know, high margin. It's going to be icing on the cake for them, and it's what should give you confidence that they're going to continue to grow. Amusement parks are going to continue to do what they do and drive, and then streaming is going to be right on top of that. So number two stock would be Disney. Number three stock is, we'll go with ARK Invest. And this is specific for my child. The reason why I chose ARK is, one, I wanted an ETF. It's the flagship ETF for RK, leads ARK, Kathy Wood. Kathy Wood is a woman. And the specific reason why I wanted this ETF is I want my child, Mini Zoom, to know the leadership. And she knows the leadership. She's in ExxonMobil. She's seen the guys that are on the board, the CEOs. But I want her to look at a company and I want her to see somebody who she could potentially identify with. Kathy Wood's a boss. We know that. As far as thinking about the talking heads right now, mainstream, Kathy Wood has as much leverage as anybody else. And so when I was thinking, I was like, I was thinking about maybe Walgreens. I was just, there's multiple companies out there that could potentially have women leadership. I really like RK. I like the fact that it's an ETF, a little bit less risk, and it actually moves. So I love this as one for her, and it allows me to give her an opportunity to identify with the leadership and to learn about the leadership and to hopefully provide some confidence into her for her and belief for her as far as the business side of things is concerned. So that's kind of my ulterior motive for RK. Again, teaching. That's 3. 4 is Roblox. Now, if you guys watch my perfect portfolio where I discuss what I felt like a well-diversified portfolio looked like, I talked about balancing speculative stocks versus non-speculative stocks and not being over leveraged, which I feel like is a very common mistake, especially for new traders. And speculative stocks are just high-risk stocks. They're ones that don't have that track record or been beaten down and maybe don't have a bright future. There's room for speculative, but in the public portfolio, we talk about 30% leveraged and speculative. So if we're talking about 5 stocks, 20% would take up this, would be Roblox. Now, Roblox, my daughter plays Roblox more than anything else. So for me, logically, I think having that speculative one that she's familiar with, a name that she's familiar with, and what she understands is that as she puts money in, she now owns that stock, right? When you're teaching somebody about buying stocks, you own a piece of the company. I don't care how small it is. So she knows anytime she spends money in these companies, a little bit's going back to her. And so she thinks, and it's true, we all know it's not a lot, but the reality is like as she puts money in or her friends play things or her friends go to Disney World, there's a little bit in her pocket. Might be 1/100th of a penny. It doesn't matter. We're teaching ownership, entrepreneurship. We're teaching confidence. We're teaching business. We're teaching autonomy. We're teaching all these things. And Roblox is one of those things that are fun. It's a name they recognize and they can get excited about. And more importantly, they can remember. Right? If you ask your kids, what stocks do you hold? What stocks do you own? This is the answer. And last but not least is SPY. SPY is the S&P ETF. The big reason for SPY is I like to use it in most of my accounts as like a gauge on the overall market. One, obviously, it's diversification. It's teaching, hey, I got 500 accounts. There's 500 companies. I own 500 companies. It sounds really cool to a kid. I own 500 companies. It's a little bit more stable, a little bit more consistent. Gains aren't as high, but more importantly, I like to see how the account is trending overall in comparison to the SPY. So you buy the SPY and you just see how it grows in comparison to other ones. Arguably the safest one in the top 5 stocks. So there you guys have it. Top 5 stocks to invest in your kids. Let me know what stocks that you are thinking about buying for your kids. Do you like these 5? Are there ones that you feel strongly about that you have in your kids' account? Talk to me about that. I love hearing your guys' stories about how you invest in your kids, the vehicles you have for them. And I definitely want to learn from you guys as well. So do that. Make sure you guys comment below and let me know. Speaking of below, link in the description. Guys, we release a watch list every day before the market opens of top 5 stocks that we're watching. Now, if you want that free daily watch list, click on the link in the description. It'll go to onlychaos.com where you'll be able to check out those stocks and you'll receive an email every morning of those 5 free stocks, onlychaos.com. Make sure you guys check it out. I have no idea how many people we have in the house. And I did a very poor job of charting, but I'll get better. I'll be better. Shout out Rajiv. Thanks for the donation, brother. I appreciate it. Much love. Mad Dick said, sorry, bro, wrong info on Costco. 9:20, Thursday, 9:23. Okay, no problem. I've made those mistakes before. Carl Tony says, GK and ARK, both early investors in Tesla. Yeah. I mean, that's what put Cathie Wood on the map was Tesla, let's be honest. GK is a little better than ARK. They invest in value plays. Risk tolerance, I think it boils down to. So we'll see. Carlos, stocks for kids, Amazon, Google, Microsoft, Tesla, Netflix. A lot of tech, but I love it. Those are great. I can't argue with those. What What else are you guys? What else do you guys have in your kids' account? Those that are watching live. Let me see how many people we have as we wind down. I'm going to go to the chat. Ooh, 51 likes. Let's get those likes up, man. Hit that thumbs up. Airbnb for kids. I mean, Mini Zoom knows what Airbnb is. Airbnb could be around. I'm not sure if I think I would still classify Airbnb as a speculative, but I think it's a great speculative stock. I love it. Maltagoya, what's up, man? Barbershop got broken. Oh, broken into. Oh, sorry, bro. That's karma for them. Don't worry about that. TJX. Yeah. My girls love TJX. Yeah, if your kids love them. My Mini Zoom knows about, so I let her pick a stock every Christmas, birthday, and then I'll throw stuff in there here and there, and I'll talk to her about it. But Lululemon was one year because her mom used to work at Lululemon, and I wear Lululemon all the time, so she knows that brand. Emerson Martinez says, first stock for my kids was Roblox. Okay, cool. Speculative, but again, could be huge upside. All right, guys, as we wind down, Vinay says, I have my kids' account. I appreciate you guys bearing with me. I think this is my first solo live stream, maybe second, but I'm here all week for you guys. Don't forget to subscribe, hit that notification bell. I will be live Tuesday, Wednesday, Thursday, 3:30 p.m. Eastern time. Make sure you check in. I'm going to be talking about my Kathy Wood favorite stocks, my Warren Buffett favorite stocks. I'll be talking with Don about the GameStop earnings reaction. Freddie Valoy, we're going to be talking about just nonsense on Thursday. So make sure you guys tune in. Definitely check me out. I will be back here tomorrow at 3:30 p.m. Eastern time. I appreciate you all. Fat Man Zoom is out. Bye.